Good afternoon, everybody. Welcome to the Trader Merlin Show. It is your hump day. Happy Wednesday. As Lisa questions, is this really the 881st show? It is. It's the 881st show of Trader Merlin. I did close to 2,500 shows for Power Trading Radio, so it's funny when I step back and look at it. I've done more shows than Friends, Seinfeld, Cheers, and MASH combined. All of them combined. Most time these seasons they do 15 episodes a year, and you look at what I do, and I'm doing probably anywhere between 200 and 230 shows a year. So yeah, adds up pretty quick. 881 today. As you guys saw from the graphic, topic for today, I had to modify the Las Vegas street sign here. Welcome to, you love that AI said, AI, give me a picture looking up at the Las Vegas sign, and that's actually the spelling that it put out there. To Fabulums, Las Vegas. Love it. Anyway, to Fabulums Trader Merlin today. That'd be my shirt. To Fabulums. Today I'm going to talk about the gamble portfolio. I actually have some new additions to it, so it kind of makes it timely to do that type of show. I got multiple questions. One came in last night. Another one came in a couple days ago. So let me read through three questions here, and then I'll spend our opening 20 or 30 minutes just going over that little bit of info. So as far the first question here from John is, what are the rules for your gamble portfolio? Now, this one came in a couple weeks back. I just didn't get a chance to get directly to it. So I'm going to talk about some of the rules for it and explain a little bit more about my portfolios. The second one was from Scott, and he says, that ARM trade you talked about today, would you call it a gamble trade? Great question. I'll address that one. And third was from Melanie, asked, do you have different rules for different markets? And I think that kind of goes into the overall theme of accounts. So as you know, I have a lot of different accounts. Most of my active stuff, most of my money is in the active accounts and my 1% accounts. The bulk of my capital is in those 1% accounts, which is I am targeting to go shoot for 1% per month. And I'm taking very low risk with those. As you guys have seen, it generally is involving these elements here. Let me scroll down to it. Should be right. Where the heck is it? Maybe I'll put them at the bottom. So typically, and I'm not sure why, it removed one of my tabs and put my cryptocurrencies in with these XLFs. But you guys know, I'm generally looking at things like XLB, XLE. I'm looking at these spider ETFs, something that's diversified that represents a specific sector. And typically, I'm looking at a market segment that's going to be beaten down a little bit and find some opportunity. The unfortunate part for me is there hasn't been that many big sell-offs over the past couple of months. So the trading in my 1% account has been rather muted, except for some of the big position that I have in silver and keeping that in the 1% account. And that's been my largest component of that at the time being. I'm trying to find other ones here like the Qs, SPY. But in my 1% accounts, the rules are specifically it has to be diversified unless it's something like precious metals, gold, and silver. There's no crypto in my 1% accounts. It's just going to be something diversified, so I remove that overnight risk. The active trading is obviously much more flexible. With the active trading, I can pretty much trade any account that I want. What I'm not allowed to do is take high-flying risk trades. That has to be done on my gamble account. So, my active trading accounts, that's a normal one. I've got capital in there, and I can buy and sell whatever I feel like it. But if it crosses over to that point where you look at it and go, man, this is really risky, then I have to do that in one of two gamble accounts. And for many people, that's the challenge, is when do you cross that line? When do you look at something and go, man, that's really risky, and why do I have to put that in my gamble account? So let me show you the gamble portfolio, some of the things I look at as far as classification of rules for it. So what do I think of Costco selling silver coins now? I don't care. I think it's funny. They're probably, I haven't looked, but I'm pretty sure they're going to be selling those silver coins at a premium. So, you look at SLV, which gives you kind of your price for silver right now. It's $22.89, been a great day. I'll probably have my 22.50s taken away on Friday. See if those 23 stick around. But my guess is for an ounce of silver, they're probably going to sell it to you for $24. So they're going to make, $1 something markup. Then you got to pay tax and everything on that. So I don't know. What's the point? I don't care if they sell gold and silver. It makes no difference to me. So when I'm looking at something to invest in, what are the red flags that make me go, okay, this needs to go in one of my 2 gamble accounts? And here are the kind of 3 main things I look at. The first one is going to be that it's highly speculative. It's got to be one of those things that you look at and you go, man, this has a slim chance of making it. It's got to be really, it's 625 coins. Wow, that's a lot of money worth. Cool. See, the thing, if you buy spot silver, you're going to have to find someone to buy it from you. And when you deal with physical commodities, it's great when you buy and sell GLD or SLV as an ETF because the spread is 1 penny. But if you take that 625 coins down to a numismatist or numismatist, how do you pronounce it, and you say, hey, buy this silver from me, that spread is no longer a penny. You're talking probably $1, which, $1 on something that's $20 is a 5% spread. It might be more than that. It could be 8 to 10%. So good luck getting rid of it. Your goal with buying silver in that quantity in bars and physical stuff and gold is that it exceeds your rate of return by a certain amount, that the spread doesn't matter anymore. That's the risky part. So when I say highly speculative, what am I talking about? Well, it's any of those market segments that have been extremely volatile. And that's kind of my second criteria as well. We could look at anything in that AI space. So, your SoundHound. Like, this is extremely speculative. Yes, they're supposed to be doing something with NVIDIA. I don't know. I haven't seen the terms of agreement. I don't know what their business model is. So for me to jump into this, I'd call this a highly speculative trade. I am, as you guys know, I'm tainted because of what happened to me back in 2000 in the dot-com bubble. I cannot tell you the hundreds and hundreds of companies that simply started talking about .com and building a website and doing e-commerce, the 3 buzzwords back then, and all of a sudden their stock looked just like this and they didn't do a damn thing different other than create a web page. So, just because someone says they're getting into AI doesn't really mean much to me. If I was going to be investing on that news, I'd want to be digging into the company much deeper, finding exactly what they're doing, product, pipeline, developers, partnerships. I got to know that. So to me, something like SoundHound, which has been brought up a couple times, that would be very highly speculative. And of course, buying right now for me was a no-no anyway because of where price is at. The other one, which I did buy some today, I finally broke down and bought some Go EV. This is extremely speculative. I mean, if I have to give you a probability breakdown here of Go EV, I would say that judging by this price chart, I feel like there's probably a 80% chance that this thing's going to go bankrupt. I hate to say it because I love what they're building. It's unique. It's different. It has a lot of multi-purpose functionality, kind of cutting-edge technology. But, starting a car company is not easy. So, why would you buy this, Merlin? Well, because I really do like the company. I like their product. I've researched it a ton. They have some pretty innovative pieces. They are delivering vehicles. So there is something there. It's not pipe dreams. It's not a never going to make it. But it's highly speculative. I mean, this is catching a falling knife like you've never caught a falling knife before. So my average price is $134. So we're up 2 cents. Yay! $134 is my average price on Go EV. But that absolutely goes into my gamble portfolio because I'm pretty sure I'm going to end up losing that money. In this case, I put $2,000 into it. I have another order for $1,000. I earmarked. And generally when I do this, I'll earmark a specific amount of just straight dollar amount that say, that's the maximum I'm going to risk here. So right now I've got $2,000 worth of Go EV. I'm going to put another $1,000 into it. I have an order standing at $1.25, and then I will have $2,000 to buy if it breaks up. I think what's going to happen is it's going to continue to slide. They'll do another reverse split, and at a certain point the valuation will get appealing enough that it may become a pretty big target for somebody. I like what Oliver just said there, unless Tesla buys it. That's a long shot. I don't think they'll do that, but what Go EV is doing is going after a segment that Tesla doesn't have. It doesn't go after the delivery vehicle market, right? You got your Cybertruck, you've got your S's, you got your 3s, the sedans, that's fine. But they don't have something to compete with like just mail delivery trucks or Amazon delivery trucks or just business delivery trucks. And Go EV really has built out a unique style, which I'm sure Elon Musk could probably do better. And since he has a lot of connections, I think it could very well be that way. You look at the valuation now, Go EV gets very attractive at $100 million. $100 $100 million, what's $100 million to Elon Musk and Tesla to expand into a whole different market share and already have the infrastructure built out? That's one possibility. But anyway, I don't want to get into selling anybody here on GoEV. That's a purely highly speculative trade. But that's the component for me that automatically puts this into the gamble portfolio. I'm not allowed to put in any of my other accounts until things change, it stabilizes. Point number 2 on my quote-unquote gamble classification is its extreme volatility. We just looked at that with that Soundhound, right? When it has really wild swings up and down, remember, this presents a unique risk to you, and that is the very quick erosion of your account. In a much safer world, I'd like something that doesn't have a lot of volatility. That's I could add on ATR here if you wanted and see. I don't know if it actually let me. I think I might have too many indicators on here. But let's just go and add on ATR if I can. No, I want to compare a symbol. I want to add indicators, and we'll go average true range, right? There, ATR. Okay, so you look at the bottom, this tells you right away, this is one dangerous beast to be messing with. If you look back here historically, September of 2023, this thing was moving 18 cents a day, dropped all the way down to 13 cents, and did that for, 6-8 months, and all of a sudden it's gone from 11 cents per day to its current volatility of 85 cents per day. That's crazy increase in volatility, and of course, while that's exciting if you're on the right side of things, that is also a major factor in taking away money from you, right? And that's, I don't want. Again, I'm trying to be a risk manager at all times, so anything like this, I know has to go into the gamble account. Naum says, what happened to Tesla's van and the 18-wheeler truck? I've seen the 18-wheeler truck. I haven't seen their vans, but that's a different product, right? An 18-wheeler is you've got the semi front end and everything just kind of bolts onto it. What GoEV is doing is building, this kind of mini van thing. I haven't seen Tesla's version of that anywhere released driving around yet, although my guess is they're going to be going that route. But, I think there could be some good consolidation going on here in the EV space. We'll talk about Rivian here in just a second, which I also own some Rivian right now. But so that's my second criteria, highly speculative, extreme volatility, and then my final component is high probability of loss. This is where you kind of have to be honest with yourself and look at something and go, what are the odds of this working out, right? Is this, I'm risking $100 here to make $1,000, 10 to 1. All right, fine, I'll take that risk, but I got to do it with a small amount of capital. I can't do it with a large amount of capital, because if I'm wrong, then I have a high probability of losing all that money. What's the downside of becoming fully registered? Can you still day trade? I'll get to that in a second. So those are for those that wanted to know. Those are the 3 kind of main things for me that I would consider gamble portfolio criteria. And we can convince ourselves that any chart is a gamble or a safe investment. It's all your matter of perspective. And I think the hard part is being objective and saying, let's be honest here, right? If I look at this one, you may love this company, you may love everything you do, but this would have to go in a gamble account for me. There's no way around it. Huge swings, massive volatility, riding the AI wave, and you can see the ATR here is like 7 times normal. That should be removed right away. Now, let's go to something different. So, let's see. Let's talk about ARM. Let's go to that ARM trade, right? So I just did one put today. I wanted to buy more, but I was like, I'll just start with one and see where we're at. So if we look at the criteria here for ARM, what are out of the 3 pieces that I mentioned? ARM, I would put it kind of in the highly speculative category. Extreme volatility. Now, it had extreme volatility. Its jump right here back in February was where it went from $3.47 per day movement up to 12. Right? That is massive, significant jump in volatility. But notice it's been flatlining. It's really, yes, it's had some moves, for the past couple months, but it has been slowing down. So in that sense, it's calmed down a little bit, and the euphoria may be out of this one. Now, my third criteria for this was high probability of loss. Well, we know that most options expire worthless, and in this case, I have purchased put options. I purchased out 90 days, so I have plenty of time for this to happen, but I also kind of went out of the money. I got the June 21st put options here, and let me scroll out here just so we can put it on the screen. This vertical line that you see here represents where the lockup period ended for ARM. Now, if we got to June 21st, that's July. So there is Friday, June 21st, right there. So I have until that window of time for ARM to get to 100. I did the 100s. I was actually going to go further out, but I decided not to. I may on a second purchase go further out if it starts to move, but basically I have 90 days for it to go from where it's at right now to this line here. It's basically dropping 24%. And given all the facts I presented to you yesterday about the lockup, the amount of insiders that hold it, and just the most probable profit taking, I don't think that that's an unreasonable target. What did those close? Were $6. So it cost me $6, and I just bought one. And I may add to that position. To the question that came through here, though, would you consider that a gamble trade? For Scott, my answer is no. I don't think that this is much of a gamble trade. Is it volatile? Not right now. It was very volatile. But I look at all the different factors that could be pushing this thing down, and in my opinion, they far outweigh the factors that could be pushing it up. Now, I could be totally wrong here, which is why my exposure to this is only $600, right? I got one put option, which controls 100 shares at $6 paid. Basically, I'm controlling 100 shares. No big deal. Most likely, I won't hold that through to expiration. I kind of want to see what happens over the next couple of weeks here with the selling, because I didn't expect the sell-off to happen on ARM right away. I expected it to take maybe a couple of weeks, and all of a sudden, people are filing I think it's the 144 filings where they have to file a petition to sell, and then they'll start dropping that on the market. Some might do it aggressively. Most likely they'll do it slowly, but I think that's going to add to that selling pressure. So I personally did not put this in my gamble account. It's not in the gamble account. So there's your answer to yours, Scott, was that one. Yes, Melanie, I do have different rules for different markets, which I've talked about those rules many times over the years on this show. But today I'm just kind of going through the rules of the gamble account. So here are the three. Number one in that gamble portfolio for me right now is GoEV. And I don't have a big position in it. I only have a couple $1,000s. So my capital in my gamble account, I have a lot of dry powder right now. So I have the potential to get involved with a bunch of other stuff. But I just haven't really wanted to take a ton of risk recently with my gamble portfolio. Next, Boyle. Right? This is in my gamble account because Boyle, I was playing this bottom out right here. Let me get that ATR. So if you look at the ATR on this bad boy, the ATR has been dropping and dropping and dropping. And that's kind of misleading. As a percentage of the price, it's actually increasing. What you're seeing, though, is, the price has dropped so much that obviously the ATR is going to be declining. So let me get rid of ATR here. I'll just hide that one. So back a couple weeks ago in February, I think it was Tuesday, this February the 20th, when we came back down to this 1345 mark, I bought some Boyle, and I bought a good amount of Boyle. Now, I didn't buy calls or puts. I actually just bought Boyle outright. Now, the risk to me is twofold on this, and this is why I put it in the gamble account. Remember, one of the criteria for that was highly speculative. Well, I do think that natural gas is going to rebound here a little bit. I think it had a tremendous oversold situation, and I expect it to kind of bottom out. Not saying it's going to scream to the upside, but I am bottom fishing on Boyle. That's a gamble in my opinion, so I put that in my gamble account. The other reason why this automatically goes in my gamble account is this is intended to be kind of a swing trade. I'm planning on holding this for a couple of weeks, maybe a couple of months, and that in itself has risk. As you guys all know, I'm always saying do not hold these things long term. Don't hold a double long or a double short or a triple long or a triple short in any market. Don't hold those things because the risk to you is magnified. The way that they're calculated, if you hold them and the price of natural gas goes nowhere, right? Let's say natural gas is at $3 and it stays at $3 for 6 months straight. If you bought a triple long, you're losing money. If you bought a triple short, you're losing money. Whatever you bought, you're going to lose money if it's leveraged because of the way it's calculated. So the longer I hold this, the more risk I have for Boyle, which automatically makes it a gamble for me. So I'm looking at Boyle rallying back up and challenging these highs. I'll sell half my position if it gets to that $19 mark. If it does get above 19, then we might see a bigger run and I'll hold on to it. But it's a very speculative trade for the second component of my account here for the gamble. Now, the third piece I have in there right now is not a big position at all either. Again, I'm being very conservative here lately. I mean, it's just getting old. And that is Palo Alto Networks. So we looked at PanW after their big earnings miss. So this is one where I don't know Palo Alto Networks well enough or feel comfortable enough to put this in my quote-unquote active trading account and feel like a normal position. Don't keep that dry powder in USD. I know, Tom. I know. It's all right. I'm making money work for myself. I appreciate that. You're right. I shouldn't let money just sit there idly. But the good news is my gamble account. Remember, gamble accounts are not intended to be big accounts. So my gamble accounts are smaller. So it's not like this is a huge amount of capital on the sidelines. That money is pretty much deployed for my 1% strategy and just active trading stuff. So looking at this picture, when it had this huge gap down day here, we brought this one up, and I was like, look, I know a little bit about their model. They are a giant firm in the tech space, so I felt comfortable with buying that fear factor on earnings, and they even beat earnings, right? Their earnings were supposed to be $1.30. They came out at $1.46, so they beat earnings, but they didn't give a rosy forecast for the future, and their stock dropped significantly. Well, I sold puts that day. I still have the 245 puts that are expiring this Friday. So obviously, I'm not going to be executed on those. Everything will be fine there. But I did put this in my gamble one simply because I was catching a falling knife, right? That was a huge drop down. I mean, for those that can't see it, listen to the podcast here. The overall sell-off that day was a 27.8% sell-off for Palo Alto Networks. And here I am saying, oh, I'll buy it. That day it bottomed out at 261.97, and I sold those puts at 245. I collected a good amount of premium. It was over 3%, I believe, for that short window of time. But those will expire Friday. And again, this was in my gamble portfolio, but it could have gone either way. But I decided to put it in my gamble portfolio just because of the volatility, the risk, and the unknown about this company. Now, to the other question about Rivian. Right, you guys have been asking about Rivian. I am currently long Rivian. I also have the $10 puts that expire this Friday, and I will probably sell some more next Monday. I'm okay with Rivian. I think Rivian it's struggling. Right, they're talking about closing one of their plants, and layoffs are coming around. That's just cost-cutting measures, and once they get that taken care of, I think things will start to stabilize a little bit. They make a nice vehicle. They're getting great reviews. So all in all, I'm okay with Rivian. It's just, can they survive the financial hit? Well, the big thing for me, as I mentioned the other day, is Rivian has tremendous financial backing or investments from major firms, and I have a sneaking suspicion that Amazon may be a potential suitor here if prices continue to slide, so I'm okay with that. So this is not in my gamble account. This is actually in one of my longer-term swing trading accounts that I'm allowed to buy, bigger positions. So I have 1,000 Rivian right now. I have 10 put options at the $10 strike price. I'll probably sell a bunch more starting next week. Right now, you can get some pretty damn good premium for the Aprils. You can get 3.3% right now selling the April 19th put options at $10 strike price. Now, that might be relatively close for a lot of you, but if you really want to take some risk, let's see, from where we are right now to $10, it means you have to drop another 14.6% to get down there. And if it did, you would, I think you gain another, I think it was 35, 36 cents worth of premium. So not a bad rate of return for Rivian for those put options right now. But that also does imply that people have the expectation it's going to be going lower. So again, be careful with this one, but I did not put this one into my account. What's the float? Good question, Naum. Let's look that one up. We had this one yesterday. Let's go RIVN. This is probably wide as well, but I'm making the assumption that this is going to be closing that gap here between float and outstanding shares. So, yeah, it is still wide. So you have, it's 969 million shares outstanding and 690 million float. So there still is a big gap there. 300 million is not a drop in the bucket, but it's a lot closer than what we saw with some of these other ones, right? That ARM was just a crazy gap, and same with VinFast. That was just way too much. This will, again, over time, get closer and closer to normal as some of these insiders are selling. And that's a good point, Naum, is to what extent do I believe that these insiders are going to be selling? Well, when I look at a chart of ARM, which has been straight up almost since it did its IPO, I'll bring that chart up for you guys here, so you don't have to stare at me. The inclination here is that a lot of people are going to take some profits and look to, get out and make some money on their lockup here. I think the selling is very probable here on ARM. If I look at Rivian, right? Remember, Rivian had its IPO way back here. So if you are someone who was involved with Rivian and you were part of that lockup and you still haven't sold, you're not selling now. Why would you sell it at $11 when you could have gotten out at 50, 60, 70, unless you're just dire for it? So I think the probability of insiders selling their shares now is probably lower. One thing that I have not looked at, and I'm going to bring this up right now just so we can check and see. I'm pretty sure I know the answer, but when you get a stock price like that that's really been depressed and had a pretty significant sell-off, it's interesting to go and see, is anybody buying? Are any insiders buying? So when I looked at ARM, no one's buying. If I look down here, scroll down to the bottom, come on, and you can see it's all sale transactions right now. So yeah, nobody here is buying. Is there heavy selling? No. I would say there's not heavy selling. Somebody here just sold. Somebody sold a couple days ago at $13.18. Man, they sold 31,000. This is Jeff Baker, the chief accounting officer. But I think you can actually click on their name and see how much they have. So he sold 52,000 shares. Let's see how much he actually holds. It looks like he's been consistently selling. This is not like it's his first rodeo. He's been consistently selling and selling and selling. But he was buying back here. He bought at $78. I'm pretty sure that's a stock options exercise. Options exercise here. Oh, Jeff Baker was also, looks like Clorox. CLX? Is that Clorox? Yep, he was a VP at Clorox before he came over to Rivian in August. And it looks like he bought some Rivian initially. He bought 20,000 shares at $1.5 million. And funny, because he just sold 31,000 shares for $400,000. He must be broke. Yeah, he's doing very good right now. Not looking good, but you can go through there and find how this is going. Ideally, what I'd like to start to see to support my hypothesis that this is kind of an extremely low point for Rivian and they might be turning the corner is seeing some of these guys come back in and buy it at 10, 11 bucks. And that would really make me feel more comfortable, even though it doesn't mean it's the end of the slide and then it's going to turn around. It's just a little bit more positive. The fact that the chief accounting officer is selling shares near all-time lows, that's kind of concerning, I'll be honest. That doesn't look good to me. It does not look good. Let's see. What would be the oil equivalent in EV? Consumable that's guaranteed to increase the EV use. So lithium companies, lithium mining companies that make the rare earth metals for the batteries, the battery manufacturers. Panasonic is one of the big ones out there that's in the manufacturing space. The other piece would be looking at charging stations, right? Companies that make the charging stations. Whoever's building out Tesla's infrastructure for charging stations, since multiple car companies are going to be using Tesla's technology, it's connector and all that stuff. That's pretty big. Andrea says, add Boeing to your gamble portfolio. That's a good one. Let me get to that in just a sec. So anyway, let me tie that all up here. So I've gone through a few here of things that are in my gamble portfolio. I feel comfortable with Palo Alto Networks now. But initially, when that had that big sell-off, I wasn't. And that's why it went in my gamble portfolio. I mean, that sell-off was pretty dramatic, as you guys saw on the chart here. Therefore, I had to go, all right, that's got to go in the gamble account. It's high risk because it could easily have continued on down. Maybe I was missing something. But the good news is I was selling puts at a lower price. So that's really all that's in my gamble portfolio right now. I'm open to add some more stuff to it, but I'm not taking extreme chances right now. Subscriptions to EV? What do you mean by subscriptions to EV? I'm not sure I understand that one, Blue. But as far as the peripheral stuff, the gas companies, if you will, yeah, it's going to be charging stations. It's going to be the battery technologies for it, and that's kind of one of the things I really liked about Canoe was their skateboard design. They have a base skateboard model built out that can fit any body design on it, and they have right now 3 different designs built for that, but you could build anything on that. You want to take their skateboard frame and build a race car on top of it? You could. Just a little bolt pattern, just got to customize your top piece. They call it the hat. The car design for them is called a hat, and it says this skateboard design will adopt different hats, which I thought was kind of a cool one. Andrew says, let's add Boeing to your gamble portfolio. All right, let's check this out. Boeing, man, I'm not touching Boeing. I kind of agree with you, Andres. I think the gamble. This is Boeing we're talking about. This is one of the largest airline manufacturers in the world, but they are getting hit by like Mike Tyson pummeling them right now. And to me, it's too risky to buy into this one. So I would agree with you, Andres. If I was going to buy Boeing, I would now classify this as a gamble trade. We had talked about this a while back when it crossed 219 and talked about where would you consider selling puts at. And I talked about this 177.90 mark, which is this turning point from back in October of last year when everything rallied. And for me, I'm not even comfortable with that. Let me do a poll just because I've enjoyed the polls. And let's see, let me type this in here. So hold on one second. How many would you be comfortable buying BA at, I'm going to just put 175. All right, that's that next level. Yes or no? I'm curious. So I got the chart up here, and you can see that obviously Boeing was at over $265 a share. Now it's at 182, and given the news and the conveniently the whistleblower who called out them for safety violations and just being irresponsible with safety was found dead in his car. That seems crazy. That's fishy. Something's going on here. It's like Boeing knows that this guy has some evidence on him. Most likely that evidence is sitting with lawyers right now. So I'm not touching it. Personally, Boeing's probably not going to go bankrupt, but there could be some serious repercussions from this current thing. There is actually, somebody posted the other day, you can go, there's specific travel websites where you can click an option that says, show me flights that don't involve Boeing 747s or Boeing airplanes. Oh, that's not good. So all of a sudden, airlines are going to look at this and go, wait a minute. We have customers who refuse to fly on Boeing because of these issues. What do we want to do with these Boeing planes? I mean, this could be pretty big for Boeing to the downside. If anything, I'd be shorting Boeing right now, and I would do it in my gamble account. I don't feel comfortable owning Boeing at really any price right now. Let me see what the poll was here. And poll was, how many of you feel comfortable buying Boeing at, where the poll results should pop up on my screen here? Huh, it didn't pop up. That's weird. All right, it didn't give me the results of the poll. That was kind of strange. Should have popped up on my screen. But it looked like most of you said no, you would not be comfortable buying Boeing at 175. And it's just too many unknowns, right? Too many unknowns in that space. And if you look at the criteria that I have here, you have highly speculative. I think you could agree that at this point it's speculative because no one really knows the future of what's going to go on there. Extreme volatility. I mean, going from 265 down to 185 in a month. In 2 months, I would say that's extreme volatility and a high probability of loss. If this goes to court and they find out, or heaven forbid, it comes out that they tracked the guy who killed this dude and maybe he died of natural causes, right? But what happens if it comes out that Boeing put a hit out on this guy to shut him up? I mean, who knows? It could go way, way down. So here we go. 66% said no. 33% said yes. Okay, and this is why markets work. Right? Because 66% of you said no, 33% of you said yes. Bottom line is those that said no aren't going to make the trade. No money in it for you. Those of you who said yes, you'd buy it at 175 and you might make money. You might do really well. But again, each one of us is going to be different on how they handle things. Tom says Boeing is more military than commercial. A bigger issue should be a new president that prefers to negotiate peace than find a proxy war. Good point. I don't know those numbers specifically. Certainly the reputation of them from commercial aircraft, if it becomes so tarnished, that could have a big impact. Granted, yeah, they might be doing more business on the military side of things, but it definitely will have an impact on their business if all of a sudden airlines are not renewing orders because people don't like Boeing. We've seen examples of this in the past. You guys remember, most of you are probably too young for this. Man, I'm feeling really old. I'm actually kind of young for this one, but you guys might remember the Tylenol recall. Right? Remember there was some poisoning of Tylenol. Was this the 80s, maybe the late 70s, where Tylenol was poisoned, and they basically said, take all Tylenol off the shelves, throw away every bottle of Tylenol you have at home. And for a long time, no one wanted to buy Tylenol. It was like, stay away from that stuff. It's poison. And, just a weird little thing where somebody poisoned with a syringe, a few bottles of it, and some people died from it. The long-lasting impact of that was quite a while. Where was it twice that they did that? And that could be an impact here for Boeing. Of course, the military's gonna be like, sell us some planes. But you're right. I've mentioned this one before. We should be at peace with people, but if we are at peace with people, then the whole military complex doesn't get paid. And yeah, in the 80s, recall that now everyone is. Yep, security foils. But even that, like, you can poke a needle hole in a security foil liner top. You can get in there with a needle. I mean, if you wanted to, you could. All right, went down. It was a good case study. I think part of it was not just, it was how Tylenol handled it, because at the beginning they're like, no, it's not a problem. And then all of a sudden it just exploded on them. But anyway, not to say that's the same thing as what's happening with Boeing, but it appears that issue with Boeing is mounting and getting bigger and bigger and bigger. So I'm not, it's going in the gamble portfolio. So there you go. That's where it's going to end up. But I'm not touching it. Too volatile for me. What I'd love to see is, I would love to see this chart just all of a sudden go into a free fall. And all of a sudden, they're required to pay, hundreds of millions, not billions of dollars, blah, blah, blah. And you see a chart that looks like this. If I see that and Boeing's down at 117, okay. Because long term, Boeing is going to be fine. Long term, they will be fine. But this could be something that really just crushes them for a while. I mean, you're low here. Let's go on a weekly time frame so I don't have to keep scrolling for everybody here. Go back to this weekly time frame. The lowest price that we've seen on Boeing going back 13 years was a low price of what? I'm trying to get that. 269 was the low there. Oh no, 154. Excuse me. Hold on. This is not. Give me. I got to zoom in just to get that exact low number. There we go. Right there. Low price of $89 was the lowest we've seen in the last 13 years. So at 89, I'm a buyer. Definitely. So now we're going to seal airplane doors with the foil before. Yeah, just a little saran wrap would be fine. Just saran wrap those doors shut. That's pretty funny. Anyway, so again, thanks for those who send in the questions. Sometimes I talk about so many different topics, but I thought today might be interesting just to go through them a little bit to see kind of what the gambling portfolio is, because for me it is really important to create that separation in my trading accounts. And those that send in questions, John, I went through the rules for my gamble portfolio. Scott, arm trade, I don't believe, in my opinion, that's not a gamble. I think that's actually a fairly high probability trade. I'll have to have a stop loss in place if I'm wrong, but because it could keep on rallying. The last 2 days have been up for ARM. And then Melanie asked, do you have different rules for different markets? Absolutely, and keep paying attention to the show, Melanie, and I will go through those more and more, but I'm not going to go through all those rules right now. Karen says, my son-in-law is management there and says that they will hire anyone that is breathing. Oh boy, that's not good. Yeah, I watched an interview with the whistleblower, and some of the stuff he was saying, you're like, oh man. Like, he many times talked about how he spotted all these issues and spent, hundreds of hours trying to correct these mistakes, but his bosses were like, no, don't leave it. He was supposed to inspect some airlines. He went down to check them out, and they told him to leave because everything was covered. It's like, oh man, I'm not a scared flyer. I'm not afraid of flying at all, but like this type of stuff does make you a little bit nervous, because as a passenger, I always assume that there's systems in place, that they're checking all this stuff and making sure that plane's good to fly before every flight. And if it starts even further back at the manufacturing side, that's kind of creepy and scary. All right, let's run through our top 8, which I have kind of neglected over the past couple days, and get into my favorite asset class of the moment, which of course is digital assets, which is screaming again. All right, I'm going to start at the bottom. NASDAQ. again, nothing to worry about, nothing to fear, but it was down 0.81%. 18,328 is where we closed at for the NASDAQ 100. The chart still looks good, although you're not seeing as strong of green up moves anymore. It feels like the momentum is tiring out a little bit here. So I will, Karen, I saw that question. I don't know about it. Let me dig into that one. I don't know if you're going to be in my crypto session after this. I have for the digital assets program at 4 o'clock today. So I will be talking about a bunch of different coins, but that one I want to dig into before I come up with a definitive answer. Okay. So NASDAQ, again, I feel like it's slowing down, but the rate of ascent here still looks great. What I will be doing is looking at these red lines, which I have on my chart. I'm going to move that one up, and now we've got that 18,138. I do feel like you're going to get a pullback here in the markets, but it's got to start making some new lows. So until it gets below this 18,138 mark, wait, right? But I think at this point, you start to get a little bit more defensive for those of you who have been bullish for a long time. The inflation data did not look good yesterday. We'll see what happens with the inflation numbers for tomorrow as well, and I'll show you that here in just a second. S&P still looking phenomenal. Right, down 0.17%, but 52.32 was your final for today's S&P. Looking great. Dollar index was down ever so slightly. Nothing really worrisome here. Some might actually call this a bear flag, where you have the steep impulse pull here. You have the sideways to up consolidation, and then next leg based off a bear flag should be aggressively down. So we'll see if that pans out. I don't believe it will. Your 10-year continuing a second day of solid gains up in yield. So right now, as of today's action, we were up 0.94%, but over the past few days, if we go back to last Friday's closing price, 2.77% increase in the yield. That brings us to 4.188, which of course is good for the long-term yield curve. However, remember, rising long-term bonds is not good for the overall economy. It is a measure of the cost of doing business. So if this continues to hook up here, that should slow things down. You know, we saw this beautiful market rally since October. Well, a large part of that was due to the bond yields dropping with the expectation the Fed was going to cut rates. And all of a sudden, oh, maybe we are going to be holding a little bit longer than we thought. So that's your 10-year. Gold. Green candle on the heels of yesterday's ugly sell-off. Still not back to the highs, but it was a 0.68% gain for gold today, 2,180. And the real highlight today, check out silver today. Silver was just ripping. 3.17% move to the upside. 22.79 is where it closed at. It had a high price intraday of 22.88. So great day for silver. I have a vested interest in it staying at $22.99 by Friday's close. So I got my fingers crossed on that one. But given this move, I've been waiting for this rally. Unfortunately, my 2250s will most likely get taken away from me. Good news, it was only 4,000 worth. The rest of it, we'll see what happens on Friday with the 23 mark there. Podium time, Russell 2000. Still ascending triangle, looking really strong, looking bullish. I think that the Russell looks better than the NASDAQ. Now, the S&P looks the best of them all because it has just been continually making higher highs and higher highs and higher highs. But that Russell, this looks like a coiled spring about ready to pop to the upside. So keep your eye on the Russell. It just feels like it's building pressure to the upside based off that pattern. Crude oil. Let's not forget, we have PPI data coming out tomorrow, and crude oil was up 2.78%. We're going to come back up to these $80.82 mark here pretty quick. I mean, it might achieve that tomorrow. Very close to getting back up to this point. If it breaks that, I don't really see anything significant on the daily time frame that's going to stop this until it gets to 89. If this gets to $89 a barrel, then you can rest assured that Jerome Powell will be quoting this, and inflation will be back on the hot topic for surging, and we will not see rate cuts at the next meeting. Joe, how do you join the digital assets? Joe, you're in the focus class, right? I think you're in focus. I would talk to your EC. If you're in the focus, just tell them, hey, put me in the digital assets. I'm already in focus. Let's see what else we have. And finally, the big daddy, the king of kings. Love it. Bitcoin, all-time high yet again. How you doing, Big Ep? Liking that? Lisa, how you doing with your Bitcoin out there? We happy? Yes, sirree. It's looking really good right now. Again, all-time highs. I'm going to be a broken record, guys. The inflows keep pouring in, and demand is far exceeding supply. So It's a no-brainer where it's going to go. At some point, I think you will see some profit taking. It's just bound to happen. But the only thing here that could derail this would be a government piece, a whale unloading a massive position, or somebody cracking SHA-256. Because at this point, demand is pouring into Bitcoin. So love it. I've received more emails in the past month about buying Bitcoin from people than I have in my entire, digital asset crypto career, which is usually a sign of a top. But I think just most people interested and want to get into it. Yeah, MicroStrategy as well. Good old MicroStrategy. And I don't even think that this reflects the squeeze. You wait until that squeeze really hits those people hard. People are losing their shirt that are shorting MicroStrategy, and if that continues, you could see this thing really pop. I mean, MicroStrategy, that's phenomenal. What a gorgeous, gorgeous, gorgeous looking chart from MicroStrategy. Congratulations to Michael Saylor. Michael Saylor, at some point, if this continues on, I hope that he gets Man of the Year. Because he saw this coming and it's brilliance. Issue debt at 6%, but make 150% rate of return per year. I mean, what a wow! Why didn't I think of that? Waiting for a pullback to take long calls. Yeah, that thing is running. MicroStrategy is buying another 500. Are they? I know they just bought some over the weekend. He's great. I love the guy. He just keeps buying and buying and buying and buying and buying. So it's awesome. I'm loving it. That's fantastic. All right, let's go into our Forex factory. Really, one of the reasons you saw crude oil surge today is inventories are getting lower and lower. Now, check this out. I know this isn't the telltale piece, but I think it's interesting noticing that since February 14th, remember this is a weekly report, notice inventories have been dropping sharply, and now they all of a sudden are going negative and contracting. Now, it does that all the time, but when you see a contraction in supply like this, that is a bullish sign typically for crude oil, and that's just this week's reading. If we get next week's reading at -3 or something, we could really start to see oil take off here, and that could be problematic for our market going forward. So that was it for really economic stuff for today. For tomorrow, though, oh yes, we've got a couple big pieces. Number one is that PPI number. Now, we saw the CPI number increase from I think it was 0.3 to 0.4. They're expecting PPI numbers to stay the same right now. I don't know. It does feel like it's going to go one tick higher than expected and come out at 0.3. Excuse me, 0.4, not 0.3. Yeah, I'm on at 4 o'clock for the digital assets program. What else? Oh yeah, retail sales come out tomorrow as well. Again, it's hard to really watch retail sales and make any sort of definitive statement on it because the previous numbers you can see on the screen here was -0.8. The expectations are we're going to come out at 0.8 positive, so a big swing. But look at retail sales historically. It's always oscillating above and below zero. I'll zoom in after the pandemic crazy whipsaw. And you can see those quite often fluctuations above and below zero. We have had, obviously a pretty sharp drop in the previous reading. If we don't come out at a positive number, then that might be a bearish factor for our markets, but it's not that telling. 1-2 data points isn't the definitive piece. It's a series of connected data points that tells us what the consumption patterns are for our markets. And retail sales obviously is good because consumption spending drives our market. That said, I think I got one last piece here. Let's go to tomorrow's earnings calendar. You had Lennar Brothers beat earnings today. I'll bring you that chart here in just a second. But Adobe comes out tomorrow. You also have Dollar General and Ulta Beauty. That's pretty much it. Those are going to be aftermarket, except for Dollar General. That's going to be before market open. And let's go look at Lennar, which has also just been cooking, been on a great trend. Came out their earnings. It's down 2.3% right now. And I'm looking at this pattern right here as a shooting star formation. Unfortunately, it will probably gap past the lows. I would love it if it would open up somewhere above 164, but as you can see, it's already trading at 161 down below that. So that would remove that as a short trade for me because it would not meet my criteria. Anyway, yeah, Joe, just rattle the cage. Just say, hey, I'm already in the focus. Put me in the digital assets. I want to go to the live session with Merlin, and they should throw you in there. They should. Okay, tomorrow. So tomorrow is going to be Jerry Baldwin on the program. Of course, you guys know Jerry. He does a short-term futures trading. So we'll do a kind of a tailored approach to it and look at what he's looking at, maybe some of the things he finds interesting, maybe some questions answered from some of you. If you guys have any questions, send them on in to TraderMerlin@gmail.com. It's actually right there underneath my name on the screen, or you can put them down below any of the YouTube videos. I did not get a chance to look at the YouTube video comments for last night. I will look at them today and incorporate everything in. If I don't get to those comments tomorrow, I will do them on our Friday wrap-up show. So thank you guys so much. And again, thank you all, Melanie, Scott, John, for those questions. I hope you enjoyed a little bit of a window into kind of what my thinking is for the gamble portfolio. Again, that is not financial advice. I'm not telling you to buy any of those things, just showing you what I am doing. And I'm taking that risk on all myself. So thanks, everybody. Hope you enjoyed it, and I will see you tomorrow. Take care.